welcome to another episode of Vantage Point by Digi Janus. I am excited always when we have some guests, but today is a little bit more special because we have Calvin Wong, who is head of digital for RHB, and he brings an extremely valuable and insightful experience of working across the industry. He's worked for Standard Chartered, OCBC, TNG, and now he is transforming how RHP is going to tackle the digital problem. So with that, I want to pass the mic to Kelvin. Kelvin, please, would you like to introduce yourself to our audience?
Thanks, buddy. Hey, hi, I'm Calvin. Well, I'm excited to be here actually. So, just a quick intro about myself. So, I've been in the digital industry for the last 20 plus years, 21 maybe. I spend most of my time in a bank. Right now, I'm actually heading up the digital for group community banking in RHB Group, the fourth largest bank in Malaysia actually. So I have always been a bank. Spent my time with HSBC, Standard Chartered, OCBC, as well as most recently with Touch and Go Digital, one of the top e-wallet providers in the country. Right. I'm very excited to be here. I can't wait to share some of my experience with everyone. Hope that I'm able to address some of the questions that you may have. Yeah. Thanks.
Absolutely. And so, Kelvin, I don't know if you've seen some of the previous episodes. We get
Yes, I
into
have.
the difficult questions first. So,
So,
now I am sure you have been on LinkedIn and all of the other platforms, and you see these comparisons where fintechs are saying you can do this in 3 clicks with us. It takes 5,000 clicks with this bank, etc., and stuff. Now, first of all, do you think it is a level playing field between fintechs and banks when it comes to digital transformation?
well, I guess it's not really on the same level playing field. Most banks have been around for like we ourselves have been around for many years. We have built a brand and a legacy, and the platform that we're operating in, the types of security and compliance process that we have in place. So with that, we are not saying that we are, as a bank or as incumbent bank, we are cumbersome. We are not. It's just that we have the responsibility to be ensure the customers' data, customers' information is actually secure, right? So when it comes to actual innovation and whatnot, we I think we can be faster, but we there are processes that we need to take place first. So just come to your question around some of these fintechs coming to talk about 3 seconds and whatnot. They may have a certain ways of doing it, but that doesn't mean that the bank can't do it. Can't do it any faster as well. But like I share with you, there are some processes that the bank has to put in place, and we also need to find out what sort of 3 seconds, what 3 clicks that it took them to actually process it. So I suppose it's pretty much an optic as well.
Yeah, and I agree with you that sometimes in order to support innovation at this fintech level, so the regulators introduce all these sandboxes, etc., and then banks are complying with the usual set of regulations, whereas the fintechs are complying with a smaller set of which works great for the innovation angle, but it also isn't a level playing field. So absolutely agree with that question. So since we are on this point, what could banks do differently so they could innovate faster?
What banks are looking at right now is that, as you know, in the new age of digital, so the banks are moving into API, looking at multi-stacks, and that fundamentally changed the way the bank works, especially when you talk about rolling out capabilities and innovation, right? You see banks starting to get into establishing sandboxes, right? Bringing in partners to come on board to innovate, to explore new ideas. So that's ongoing. um, it's the question around how fast. It's not about speed. It's actually about, are we addressing the right problem statement? Are we addressing the right questions? Right. That impacts that particular bank. Right. So not all banks will have the same issues and questions that they want to address. we may have a different or common sets of problem statement, but um, but the innovation will definitely come in a very different aspect, right? But having said that, as I mentioned earlier, is that doesn't mean that the banks are not innovating. They are innovating. They're putting a lot of resources. They're addressing it maybe perhaps in a different manner, and they are doing it in such a way that it has to be meaningful to the business that actually drive business value and customer benefits as well.
No, absolutely, and I really like your statement where you say that banks are addressing a different problem statement or a different use case, etc. I want to dive a little deeper into that because I know there you talk a lot about that. So how would I'm sure there is a large wish list when it comes to the problem statements and the things that the bank wants to address. How would you narrow that down, and how would you choose the one problem or two problem statements that you want to address?
Well, that's a good question, right? I think to begin with is looking at what is the bank strategy and bank objective. Where do we as a bank, where do we want to achieve in the next 5 to 6 years or maybe 3 years, right? And how do we get there? Now, as in our day-to-day process, in our day-to-day operation and business, we face a lot of definitely will face a lot of pushback, headwinds, and challenges. But at the same time, we do have opportunities as well, and opportunities in a sense from it could be a new partners that we get on board, a new technology being identified, the new ways of working as well, right? To marry the both of them. Um, how do we narrow it down? Essentially, is to find that the 3 or 4 critical items, the critical success factors that's so important for us that help us to achieve that next leap, right? That help us to achieve our objective and vision. So with that, we then go down deep dive further and say, to get there, we probably need to break it up into multiple phases, and that's where we start to work on and put in more strategy, more initiative, more capabilities. Bite size, breaking it into bite size, so that we can actually have a realistic achievement. Yeah.
Oh, okay. And thank you for that. So, that puts a lot of things into perspective. Now, as we have done a little bit of research on you, so what that means is we see what the topics you're talking about, what has who you are sharing on LinkedIn, and what the bank is doing overall. So I know digital is a very very big focus for you. You're the head of digital, and you are talking a lot about hyper personalization, digital platforms, and RM efficiency, and of course self-serve platforms. So I see you talking about these three or four things, and I want to dive deeper into all of these things. So where do we get started? Which one do you choose first?
Your call. I'm fine with both.
Okay, okay, I'll choose hyper personalization because
Let's
that
do
is
that.
my favorite as well.
I'm
Now,
sure.
hyper personalization, is it an overhyped buzzword right now, or do you really believe that is something that banks can truly deliver in the next 2 to 3 years?
Um, well, hyper-personalization to some extent, I agree with you, is actually a little bit overhyped, right? But having said that, um, banks definitely need to look into it in by means of delivering some like I mentioned earlier, delivering an outcome that truly benefits the customer, right? So here we are. The way that we run, the way that we operate, we look at what is the outcome, which can be from a business value perspective, from a customer value perspective as well, right? The hyper personalization today, that's right, the personalization today that we could see would be as simple as a banner on the screen. Perhaps it depends on the places that you have visited, right? The text, it could be the link that you clicked on, right? It could be perhaps some certain text that you actually typed. um, it it takes on that based on your cookies, based on your past visited histories. Um, Sites owner actually just display banners that says this relevant to you. But if you're looking at from a banking world, is that how are we going to use that information to even identify the customer, But it will be even further. It will add a further challenge to us when we move into cookieless environment come next year as well, right? Where there's no way for even advertisers or marketers to actually, track and target this group of customers. So for us as a bank, I guess when you talk about hyper personalization, we need to deep dive and really need to understand the customer more beyond just who they are, where they went, right? We need to know uh, what have they done before, what sort of transaction they've done, be it online and offline as well. Is there any way for us to capture their interests, as in truly what their interest is, right? Be it for fashion, food, even technology and stuff like that, right? Gadgets. Is there a way for us to marry those information that we don't have and we call it third party information, right? As I said just now, is that with in the cookieless world, we will not be able to capture those information. So we definitely need, in some way or form, for the customer to avail those information for us, right? And at any point of time with that, of course, you build that in along with maybe the next best offer engine that you may have. You push the right information, you push the right um, promotion or advertisement to the customers that when as and when they need the most, right? It could be special interest rates, um, even on promotions, cashback, and all that, right? So that's just one part of it, and that's pretty much from a sales and marketing standpoint. But the other side of hyper personalization could actually help you to retain customers, right? And especially when you have customers that face an issue with, let's say, your contact center or your ATM or at a branch. Now, with that, if you are able to capture all those information centrally, at any point of time, these customers come on board in any touch point, we should be able to push a message to the customers that say, well, seems like you had an issue with our ATM. Well, here you go. There's a $5 cashback for you, a voucher, something that you can use on our partners and all that, right? So I believe this is going to be very powerful. But the question is, how do we get all this information and push it out to the customer? I think that is always the challenge that we're trying to address.
Absolutely. I think you're tackling the hyper personalization or the personalization problem from a very good angle. In fact, a few episodes ago, we had Marla Sofer, the industry solution CTO from Microsoft, and I
Yeah.
asked her this question: what can big tech learn from financial services? And she was like, how financial services have managed to maintain a relationship with the client for so many generations. As we just mentioned, there are banks who are almost 160 years old, right? So
Mhm.
how they've been able to maintain that. Now, what you just mentioned, getting all these preference data, etc. Now, in segments run by RMs, this information is already with the RMs, at least for some subset of customers, right? So do you think getting the RMs to get this information into a system and then running all this, next best action, etc., is this something that is achievable in the foreseeable future?
I don't see a reason why not. You see, the difference between an RM and a platform is that one is we have a personal touch from the RM. To be honest with you, we can't live without RM.
Yeah.
Neither can we live without the platform. And to be honest, the platform will serve as enabler and even provide RM a better tools to have a meaningful conversation with the client or the customers. So what the RM has essentially is years of experience that may not be able to translate into ones and zero, right? Again, I mean, when we look at some of the sci-fi movies, so robots essentially you have ones and zero. It's all about data input and output. But when you talk about human, basically human, there is this third dimension that the robotics may not have is actually emotions, right? So an RM basically have built that relationship and emotional relationship with the client. That by itself is not able to translate into the platform. But what the RM could do essentially is to say, this client fall within a certain segment, interested in this, it could be in any areas, and the platform would then be able to recommend and hyper personal. I mean, even push. recommended products or even messages, or even reports to the customers, right? But I would say, I, I would like, if I given a choice, definitely I would like to keep both RM, having and then being supported by the platform itself, and make the platform as a tool for the RM to have that ability to sell more to the customers. It's not say, and also to service better, to offer us better service to customers as well. Yeah.
Absolutely. I think, Kelvin, that is the best answer I have heard when it comes to digital platforms versus RM, and how digital platforms can be an enabler of RMs. I do personally work with some of your peers in the industry, and I see what is going to happen is, and this is my prediction. So my personal prediction, please, not related to any organization. I need to make that disclaimer as well. Is that RMs are going to get disrupted. And
Mhm.
disruption has a negative connotation to it, but it is not really a bad thing. So what that means is, like how accountants went from being bean counters to, risk advisors, forensic scientists, forensic auditors, etc. I think what is going to happen is some simpler transactions are going to move to the what do you call as digital platforms. I need to buy X thousand shares of Apple. I can do that without the RM, etc. However, a lot of RMs would uh, you know escalate or elevate their own stature to advisors and trusted advisors. What you also mentioned, that they build that emotional connect with the customer. So now, if you are an RM today, what do you think how would you want to prepare for a future where you need to be an advisor rather than an enabler of transactions? What two or three things do you think they should be doing differently?
Well, I guess if I'm RM, I mean, I understand where you're coming from. If I'm an RM, I'll be truly worried about number one, robo advisor that's available today, where client themselves is able to self-serve, right? If an RM, I'll be worried as well in the sense that the readily available all the wealth insights reports. Likewise, if an RM, I'll be worried that the platform is able to provide that kind of 360 view of the customer's portfolio holding. But conversely, if you look at it, all the three items that I mentioned is double-edged sword. One, it could take away my job. The other one is that it could actually supplement, even empower my job. Again, having for me to have a meaningful conversation with the client. It is truly depends on the client preference, where if they like to self-serve or would they like me to service them. Some of them say, I know how to do it, but I still like to talk to RM because they they are more interactive than a robot advisory, just for example, right? But some clients who are a little bit more adventurous, they say, look, let me just try out the self-service model. You have your robo advisory. I like to play around with it, put in some numbers here and there, and let's see what it turns out, right? And then we'll go from there. But that doesn't mean that they do not want to be served as well by the RMs. It's just it just gives the client additional option, an option to be able to be independent and be self-serve. But ultimately, they'll still fall back to their RM for additional guidance and advice, right? So coming back, the platform itself, they have what it has is actually an algorithm that support the client, but what the RM has is experience, the certification, and of course, again, the attachment to the client, where they can actually provide a meaningful and in-depth advices as well. Yeah.
Kelvin, thank you so much, and that was an amazing answer about how RMs can use relationships and personal touch to differentiate them against digital platforms, which are a collection of zeros and ones, as you put them. Now, if we could expand the conversation from here. Now, right now, you were talking about RMs competing with in-house digital platforms. However, you have worked across the industry, and if I may say, there has been a mushrooming of digital platforms. From fintechs, from maybe even transport or logistics provider coming into into banking and other. Do you think anybody who's starting their digital platform journey now is doing too late, doing too little too late?
No, I think the straight answer is no. As you can see that new you see new startups, new tech companies, sprouting out or mushrooming, because they identify certain um, angle or certain space where they see as an opportunity for them to come in, either to support the business, to support the community, the customers. They see that there's opportunity for them um, to make a difference, basically, right? They may have an idea, may have a solution or product in order for them to do so. So there's yeah. I mean, if you start a company, I mean, there are a lot of startups every day. There are a lot of startups just starting up, right? It all start with someone, a founder with an idea. No, the straight answer is no. There's no way that it's too late. I mean, for all you know, after we retire one day, we decided to start a company for doing somewhat similar to this. In your opinion, right? To say that is it too late? I don't think so, right? If you're passionate about what you intend to do, if you truly believe that your idea is able to make a difference, can contribute, then it will never be too late.
Absolutely. Now, let's assume it is not too late, and for anyone to do a digital platform. So, a quick follow-up question: why would a customer choose a digital platform that comes today from a bank versus the fintech or the big tech platform they've been using for, let's say, last 18-20 months?
Well, there are many groups of customers from that perspective, right? So one would be, let's break it up into some of the customer segment that we are quite familiar with, right? So let's say the and experienced investors, for example, experienced investors typically, as I said earlier in the recording, to say that they will have an RM that support them, and they will still leverage on their relationship with RM to get insights and advices. But at the same time, the experienced investors would also like to explore the platform capability, right? Perhaps it helps them to gain access to the data or the information in such a way that is formulated or formatted in a way that they can consume fairly easy, right? So this would be the type where it's of a hybrid. Maybe on the other hand, you have a group of customers that believe they want to be in control, right? They may not want to, listen too much from their RMs and all that, right? They only depends on RM for certain matters, for example, but they want to be in control. They want to use the tech. They want to use the platform to invest or to divest or basically to portfolio, right? So yeah, I mean, you have a few groups of customers, and these are just some as example.
Okay. No, and absolutely. So, what you're saying is every platform is for a different set of customers. So there would be customers who would do well on a fintech platform, but there are definitely customers who would benefit from a banking platform, which comes with the RM service. So that makes a lot of sense. So so what I get from you is everybody's solving different problem statements for different customer
Yes,
segments, and
correct.
there is a space and there is a place for everyone that is doing this well. Absolutely. Now, uh, I have to ask you this question. And if there was one thing that you think that banks could forget, or you could change about banks, what would that be in their digital journey?
Well, you're putting me in a very pretty tight situation there to address. But then, if I were to take away that, take away that hat that's to say that I've been in the banking industry for 18 years or more. If I take away that, basically, I would like to see the banking industry to be able to be bold, be free to actually be innovative and creative as well. The banks typically are, but then be a bit bolder than what they are today. Because the way that we operate is that we will try to push a little bit of the boundaries from a regulatory standpoint. We know we have a regulatory commitment, so we need to stand guided by that. But occasionally we need to. I'm not asking as a banker, we're not asking everyone to not follow the regulatory, but let's push it to say that how much of it, how much can we be innovative and be creative in order to serve the customer, in order to drive business outcome, right? So at the end of the day, we want to make sure we do it in a safe environment, but yet still within the customer, I mean, within the regulatory confinement. So it's, I mean, that's something that I'm doing and internally as well, every single day together with my team, and together with the wider team as well, to say that how do we do that, but yet we are, actually fall within that set of regulatory guidelines. Yeah.
Right. And Kelvin, you made such an interesting point there, which people don't appreciate enough. That when you are in a regulated environment, people have followed regulation for a while, and the whole ecosystem and the whole environment has changed, but the regulations have not changed. So somebody needs to go in and question those regulations and their applicability and validity in the current operating environment.
Hmm.
So whose job should that be in a bank?
Um, Actually, it's not a one person's job. It would be number one, the bank plus the industry, jointly with the regulator. And just to be upfront, Central Bank of Malaysia or Bank Negara Malaysia, they're actually taking a very proactive role as well when it comes to innovation, and they encourage banks and non-banks equivalent to be to have a positive engagement with them as well, to say to even share ideas in terms of how we need to run, what are the changing landscape, because they are aware that technology, the way of working, the digital landscape itself is ever changing and it's very fast. And for them as a regulator, we may not be able to catch up that fast. So it depends on us, the FIs, the non-FIs, and even solution providers like yours, like that out there, to actually engage them to say that these are all the new tags and this is how it works, and it helps them to craft out probably a new policy, a new white paper for us to look at and how to operate. So it would be all the banks, the entire industries, and players alike to come together and have a constructive conversation and say how do we want to drive this forward collectively. Yeah, but within the bank itself, I'm doing that along with many other people. So everyone is have the same vision to be innovative and creative in driving all these digital capabilities. Yeah.
Absolutely. And Kelvin, I now I'm going to put you on a little bit of more spot, but in a nice
More
way.
side spot.
Yeah. Yeah.
Okay.
So, for a lack of a better word, so I will say call it I will call it a bigger spot, right? Let's say.
Bigger spot.
Now,
Okay.
yeah. See, we have heard about a lot of initiatives that MAS does, etc. I want you to pick your two or three favorite initiatives that Bank Negara is doing, so and talk about those to us, like how are they promoting innovation, collaboration in the industry, and overall bringing the ecosystem up. So how are they doing? That's two or three points that you feel are they're right on the marks there.
So number one is that from a regulatory standpoint, they have a sandbox environment that encourages not just FI but startup as well to participate, to even use the environment to innovate and test out new capabilities and solution. From that perspective, it is very helpful. So whatever solution that goes in there and is being, I wouldn't say vouched, but it's actually seen by or perhaps presented to the regulator for them to believe that certain technology works with certain controls in place, then it's going to be it will benefit the entire industry, right? I give an example of the eKYC as well. So the provider actually went in to showcase how the eKYC solution works, and with that, then they are able to help the regulator to carve out, to give them an understanding of how what the controls that can be put in place and how it can actually operate within the banking environment. So with that, then you see that capability being scaled and implemented across most banks in Malaysia, for example. The other one is it's I guess it's no secret as well. Um, Bank Negara is own, I would call it, entities. They actually drive digital payments, and it's not new, and they have been around for many years. And I suppose that is the best initiative driven by the regulator to really increase cashless society, increase cashless adoption, right? From a transaction standpoint, and encourage bank to help the unbanked customers to even adopt digital payment as well, right? So yeah, I would say these two will be the yeah.
Okay. And you used one of the terms that I really want to get your opinion on. So, getting unbanked customers to a place where they are banked, which is also called as financial inclusion. Now, over the years, I've been following so many industries, and I'll tell you, there are so many fintechs who start with the goal of financial inclusion, which is basically bringing unbanked customers into the banking system, lowering the transaction cost, or bringing them in. However, most of those end up being marketing statements, or a positive PR exercise. Why is financial inclusion such a difficult job? Of why nobody is really like hitting escape velocity when it comes to financial inclusion?
Well, to be honest, I'm not very sure where the problem lies. I guess the bank has a responsibility to number one, to educate customers of all level, right? Educate them from the perspective of financial, let's say financial management. How do you save? How taking up loans will be able to put you probably in a. It may help you to resolve some issue immediately, but over the long term, you may need to service those loans and all that. But so I guess it falls back to financial education, right? That we need to educate the customer that savings, how do we save that for the future, for rainy days and all that. Um, and that some customers or potential that unbanked segments, they may not truly trust the bank as well, or maybe may not have access to the bank for that matter, depending on where they are right now. And typically they are not within the urban or suburban area, right? They are a little bit more from the remote side, and they may not have access to the bank as well, right? So I guess that there are no real answer to that question or to that problem, but bank will still continue to try to address the unbanked segment, right, by continuing to make transaction to be number one, more readily accessible, and also in terms of cost. And I believe today even cost to serve, when it comes to transaction fees, are all regulated. It is not very high, right? It's not expensive. I mean, if there's no cost for customer to even save with to save in deposits itself, let alone for you to even take up a mortgage loan as well, right? So I guess it depends. I mean, having said this now, I guess it all boils down to education as well as awareness on the customer.
Yeah, absolutely. And I think, Kelvin, what happens is that the cost of transaction versus the actual transaction is so skewed in favor of not happening that most customers, banks, fintechs, etc., end up taking the option of not doing the transaction. And because at the end of the day, banks are also responsible to their shareholders, right? So I think it is a very delicate balance. There is need for an education, there is need for digital platforms that make the transaction cost lower, exactly the role that you're playing. And as you say, it is a complex problem. I agree with you. It is not only a technology or an access problem, it is also a mindset challenge, and how do you overcome some
Mm,
of the
correct.
own mental blockades and biases, etc. So thank you. So we have had some really interesting questions. Now I want to ask you a few more before I let go of you, because it has taken a while to get you on the show. I'm not going to let you go so easy. So now you are seeing that there is the competitive landscape in wealth management is getting far more competitive. It is getting, every day you would see some bank saying, what, we'll just focus on wealth management, or some other bank saying, we'll focus only on these markets, etc. And within that, within wealth management. Now, do you think the industry is becoming over competitive for its own good?
From a digital wealth perspective,
Yeah.
to be honest, I think it's not that competitive, at least in Malaysia's standpoint.
Okay.
We would like it to be to a stage where it is, where customers, our own existing customers, and as well as not our customers in general, basically banking customers, they have option to actually options to choose the right digital wealth platform for them to use that that they feel more comfortable with, right? To some extent, it is relatively new to them, and perhaps when it comes to perhaps in your perspective, the competitiveness could be in comparison to the way that the banks service them, perhaps, right? Some banks have access to better asset management organization where they get access to the right wealth report and wealth insights, right? They are supported by the analyst. But in terms of the platform to service them, I think right now some banks they have a digital wealth capability, but to be honest, it is not that quite matured yet, where the client or the customer will say that, right, so this is the bank if you want to go on digital wealth, right? And I don't think there is or there are any right now. So having said that, so this is a space where we want to get into and truly service our customers from that perspective, to give them an avenue to be able to, how would say, access to their investment portfolio, right? And we are really to work with partners that can help us to, to reach to that level.
No, absolutely. And we I will end with two more questions. So, we have had a very
Sure.
insightful. I must tell you this, that there were a lot of times I had a follow-up question and you just precursorily, like, you answered it proactively. I was like, shit, where do I get another question from? So I do have my two last questions before we go ahead. So the first one
Go
is,
ahead.
what what do you see as three trends in the wealth management industry that will play out in the next 3 to 5 years?
Wow. I don't have a crystal ball to answer that question.
Oh shit.
Um,
We should have
yeah,
sent you
but
one.
but no, you could hopefully come with a snow globe as well.
Okay,
Um, but one, I guess it wouldn't change too much. Where we are right now is that, like I shared earlier, is we're still pretty much early in the stage of digital wealth solution, even industry wide as well. Some banks already have it, but the real question is whether if the customers themselves truly utilize the digital wealth capability. It may not be a the lack of want from the bank, or motivation, right? But it's more perhaps again coming back to customer education, customers' preferences. You have tools out there that the client or customers can actually use, but they may not be truly, um, how do I put it, reliant on the tools yet, right? They're still reliant on the RM, occasionally use the tool as a mean for them to access when the free time, whenever they want to see it holistically, formatted it in a way that they like to see it, right? So if I were to say that next three, I would say I'll still maintain the three abilities where RM will be empowered through a RM capability platform that's helped them to service the client. I guess number two is the ability to self-serve the customers. So customers do not need to rely on, or client do not need to rely on RM so much. They can do portfolio, um, and then the ability for them to, um, even interact and communicate digitally with the RM as well. I guess thirdly would be perhaps a different method to convey, as you know, some of the wealth report and wealth insights can be fairly technical and complicated, right? If that portion can be delivered differently, right, to to customers or the client, I suppose that will make them easier to understand as well. Yeah.
oh, I work with a lot of wealth managers, etc. You are the first one I've met and who said how do we make these insights easier for the clients so that they can
Yeah.
understand them better? That I was sitting here and I was thinking, oh wow, yeah, how is nobody talking about that point? That making all these technical aspects easier for the customers to understand. That could be the idea of a next startup, Kelvin. So we could
Perhaps for
absolutely,
yourself as well.
absolutely. And so before we let you go, and thank you, you've been really candid. Now the last part, one thing you would like to change about the wealth management industry today. You can't use any of the answers you have just given. So this is how we corner our guests. We ask them all the insightful questions and then one last one to corner them.
One last question.
Yes.
Right. Well, I guess my back's against the wall right now. So the
Yeah.
only way is to really push it through, right?
Yeah.
One way to change the wealth industry, um, to be honest, I'm not sure. Um, like I said, we are not at the stage where, um, we are making a huge dent, a different proposition compared to what we are offering today, right? Other than availing it on a digital channel, to some extent, it is almost an extension of the likes of your online banking, your online transaction. Um, but perhaps if I were to be able to um, just hypothetically just mention one, I suppose, is how we serve the client today. Maybe perhaps through the digital channel, right? By use a combination of voice and video. So today you have maybe the ratio of RM to your client could be 1 to 10 or 1 to 30, right? But perhaps with a digital wealth platform, essentially you can actually increase that ratio from 1 to 50 perhaps, right? Enabling that platform so dynamic, so interactive that the client be able to reach out to the RM through the platform itself by means of a video and audio itself, right? And the transaction can be done fairly quickly. Um, and that also in some way helps to streamline some of the RMs, and the way they serve the clients.
No, absolutely. That is a great vision. And for those who don't work in the financial industry or are not aware, the vision that Kelvin just gave have 8 to 10 regulatory issues that need to be resolved, and then there are technological challenges and then preferential challenges. So it might seem like a simple problem, because people sometimes they are just born with technology and they're like, oh, we are talking about metaverse, so maybe RM wears a headset and goes out there, but there are regulatory and technological and surveillance and so many other challenges that need to be resolved, and that what makes innovation in a financial institution or in a regulated industry that much more challenging. So I think the next time you see innovative or a different offering, do appreciate that your banks are working really hard on that, and people like Kelvin are really driving digital and solving problem statements for you that you might not even know had existed. So thank you so much, Kelvin. This was an amazing episode,
Thank you.
and
Thanks for having me
thank
here.
thank you for being so candid, and thank you to all our audience for joining us today. And everybody have a very very good day to yourselves. Thank you.
Thank you.